Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Wednesday, 28th of June. Today is a very interesting day regarding fundamentals and also technical analysis because despite the fact that Jerome Powell said bad things, really bad things regarding the outlook on the economy and inflation, market's still going up. But then let's see what happens. But first, let's review the economic data. NBA 30-year mortgage continues slightly higher, 6.75, showing that rates are still going higher. Despite that fact, 3% are still applying for mortgages, up from the 0.5 of the previous one. Refinance 439, a little bit higher than the 425, so people still think that rates are going lower, but those are not facts. High rate hikes are still in the food, in the the menu, and are most probably happen in the upcoming months. But also the 30-year mortgage could reach 7%, and applications are still there. So demand is still showing at these high interest rates something really bad for absolutely everything. But let's focus on Fed Chair Powell's speech because I think this is going to shock a lot of people, and most probably I think it's going to shock you almost the same. So let me share the screen. As always, statements for 28th of June. Powell said, "We believe that there is more restriction coming, driven by the labor market. More restriction means more hikes, and labor market remains really strong. They want to see weakness on the labor market because right now the inflation is driven by that. And unless that softens in the upcoming months, more restrictions and not only one hike, maybe two, as they said, will be happening. I wouldn't take moving at consecutive meetings off the table." Well, this is not leaving off the table one hike, but maybe two. There is significant probability that we get a downturn, but it's not the most likely case. Downturn refers to the hard landing on the economy. So there's still this is not the most likely case, but still a probability that we still have a hard landing of the economy after the battle with inflation. I see a path for the labor market to soften and balance to return. Okay, but we are getting softening. We need, but slower than expected. They are not happy with the progress they are seeing on inflation going down. I don't see us getting back to 2% this year or the next. This is critical. I see us making progress, but 2% core inflation by 2025. This is huge. People have no idea the amount of pain that they will suffer if we get 2 years with high inflation. Because I think you are part of the market, you trade the market, and you are on top of all these news. But the regular people, the normal people is not this. They don't have this information. They live their own lives and they think that inflation is really transitory, and they think that maybe this year or early next year they will be getting the 2% on inflation, and there's no way this is going to happen. Higher for longer. And after this, let's take a look this higher for longer, how much it is, because markets are continuing pricing in only one hike, as you can see, with 81, almost 82% of probability of interest rate hike, 25 basis points on July. But if we check the probabilities, they are still seeing that early next year, January, they are Fed starting to cut interest rates. And let me tell you, unless Fed see really progress on that, I don't see that happening. If you see the 525, that's the terminal rate that they are pricing in. And Fed said that maybe there will be another hike. And look at this, 26% of probabilities. This was almost 10%, 15% lower a couple of days ago, and still increasing. That's for November. So markets are not buying the fact that Fed is going to raise 2 times interest rate hikes. They are saying one hike and starting the cut on January. Let's see what happens, but as always, if markets don't get what they want, there will be a lot of troubles. There will be a lot of pain. In other news, Nvidia and AMD are getting hit today quite heavily because Biden administration was looking at possible new restrictions on exporting artificial intelligence chip to China. And that is really bad for them, obviously. Let's see on the charts how this affected all these two stocks. Nvidia is 1.49 on the day. When news hit, look at this after hours, look at this sell-off. And we started the day, let me check, from this to this, it was minus 5%. And since then, traders are pulling 4% up. So despite the fact that news are not good for Nvidia, retailers are still buying in. And this is not only affecting Nvidia. There are other stocks, and the overall market, the Nasdaq, is feeling the same, despite the fact that Jerome Powell is super hawkish with the outlook on inflation, on new hikes, and even a hard landing. Tech is still pushing higher and higher and higher. AMD was also quite affected. Look at this, and basically they recoup the yesterday's price action and after hours sell-off. So really pushing the market up. Apple, this orange line is the latest all-time high that is still pushing and grinding higher. And it's basically like that. We started shopping around in Apple, and then we tested higher and we pushed. But look at this move. Look at this move. This kind of move is after the digestion, after the lunch hour, that normally you can see really aggressive moves after the lunch hour into the afternoon, after all the fundamentals, all the news, all the catalysts, all the economic data is digested. The markets show the real face, and Apple suffered a little bit, still in the green, 0.53. But Microsoft, look at this. Microsoft is not bullish. It's not bullish. This is a huge W. Tesla, 2%. Tesla has their own catalyst with Volkswagen, Ford, General Motors, and Volvo, and a lot of other huge brand automakers that are following Tesla standard regarding charging stations. And this is huge for Tesla, and it's showing a lot of strength. Look at this. It rejected the gap and it bounced. It bounced, but the rest of the market is not following because the rest of the market is really worried about the outlook. Amazon basically flat, 0.02. But again, we are seeing this kind of action in which we try to push higher based on 0 DTE options, and gamblers are still trying to push higher. And then when big players come in, we see these pushes down. Google 1.34. It's basically also, I was hoping that Google will test the opening gap, but it's not yet there. But in my opinion, it would be the best for Google to really test this gap and continue higher for a healthy price action. We don't want to test this gap and come lower to this consolidation that we got on April. Nvidia, we already covered that. Really critical this 420 level that we are now rejecting, and fundamental news are really bad for Nvidia and Meta and AMD, and Meta still rejecting the gap that is left until 323. If we check the 1 minute time frame, we can see a lot of choppiness. And today was really weird because the overall Nasdaq started like yesterday. If you remember, my analysis yesterday was really waiting for applying patience to this open until it consolidating, and well, it started to move higher and broke this pivot, it just skyrocketed higher. This was accumulation, and also open interest in the NQ was plus 8,000. So there's new money longs coming in, and today was almost the same, but it was Christine Lagarde, the governor of Bank of England, the governor of Bank of Japan, and Jerome Powell that were on the forum in Portugal talking about policy, interest rates, and all that stuff. So it was quite choppy in the opening, but look at this, the same kind of accumulation to move higher. We broke. This was what I was watching. After this big reversal, we held yesterday's top third of the price action yesterday. We held this level today, 15,000, and we started moving higher. Basically, this pivot, I was watching these pivots as target after breaking settlement at pre-market high. We broke that 15,140, and if we check the slower time frames, look at this. This was the level that was my target, and then 200. We pushed 200. We retested. We started going higher again. I think a lot of people just bought this dip, I'm pretty sure. And look at this. Flash, almost to the opening range. So Nasdaq is flat, 0.02. ES is 0.21 in the red. And overall, yes, we got this higher low on the Nasdaq, and the S&P is also putting a higher low on the fib retracement. Everything was looking good, but I think what Jerome Powell shared with us in this forum was a little bit concerning, and markets will most likely continue chopping today into the afternoon. Let's see how we close, if we close in the red or in the green. But as you can see, higher pricing was rejected. We were pushing quite aggressively, but then we retraced almost to the opening range. So something to think about that. Another thing that I was watching all morning is the dollar. As always, when dollar goes up, stock market should go down because dollar is defensive in nature. You can see the higher low established in the dollar and then starting going higher with these more or less kind of pullbacks going higher. I still think 105 is going to happen on the dollar, or at least 104 retest of this zone. But dollar going up this aggressively, not super aggressive, but dollar being in the green 0.50 almost, and Nasdaq almost trying to go higher, it makes no sense. It makes no sense. So I was watching for dollar to really fake and turn into weakness to really confirm that overall market was digesting into the positive, but it was the other way around. Dollar held these levels, 103 is key, and Nasdaq faked the move and just sold off into the lunch hour. Let's see how we end up today, but this kind of, as I was yesterday saying the same thing, it's not what happens sometimes, but it's most importantly what doesn't happen. We broke and we didn't hold, and this is more important than the fact that we squeeze higher. So there are a couple of things concerning. Gold is also in the red, confirming weakness on the interest rates outlook. So gold going lower. Gold is quite sensitive on higher interest rates, and they are they are smelling the shark in here. And gold, it's basically saying that interest rates are going to be higher in the short term. Copper minus 1.58. Look at this, really showing weakness on the overall worldwide economy, and silver also in the red. So there's demand destruction, there's weakness in important metals worldwide, there's weakness in gold, and there's strength in the dollar. That's why it makes no sense for Nasdaq to continue higher in this environment, in this context in which the Fed are willing to continue pushing higher interest rates. Despite the fact that Tesla is pushing, Nvidia is AI hype and all that stuff, everything, all is good, but you really have to pay attention to the details and what are doing other markets. Finally, I would like to talk about the regionals. 1% in the red. Financials XLF minus 0.62. That's really bad. You want financials to really push higher to confirm this bullish run. And equal weighted ETF still trying to push higher. A little bit of pullback here. I would like for this zone, let's chart that resistance. I would like this zone to really be broken. And that would mean that not only the tech is strong, but also the rest of the markets, the Russell 3000, the Russell 2000, the S&P 500, and Nasdaq. Because remember that Nasdaq is 100 stocks. S&P is 500 stocks, but there's a lot of thousands of stocks in the Russell 2000, in the Russell 3000 that conforms the overall markets. And you want all the markets to really push higher, to really show you that there's broadening in strength in all the stocks, not just a couple of 5, 8, 10 stocks that are basically pushing insanely levels, all-time highs based on AI, based on FOMO, and other retailers jumping in with nonsense. So you want to pay attention to how the other parts of the markets are reacting to the news to see if tech is really showing strength or it's just another bubble. The percentage of stocks above the 200 moving average, it's basically at 48. It went a little bit higher, but again, I would like really to reach this level, 57%, almost 60%, as we were back here on February. We were up here, but then the sell-off occurred. But there's a lot of differences in between this chart that shows the amount of strength in the other parts of the market and the Nasdaq. You see this chart and you don't see key levels being broken. You see consolidation and trying to push higher, but then I show you this chart and it's completely different. So there's only a handful of stocks that are moving this market. And you have to question that. Why is this happening? And I always perform this kind of analysis. You can really see my previous videos to really see how I read the sentiment on the Nasdaq and the S&Ps in comparison with other markets. And I think it's quite clear what is happening here. And sooner or later, tech will just be completely destroyed because it's retailers that are jumping in on AI FOMO, but the big players, the hedge funds, are continuing adding on leverage shorts based on the fundamentals. Because if you read the fundamentals, if you see Jerome Powell speaking, if you see the economic data, you see the indicators, everything is looking pretty bad regarding the outlook. And all these stocks are pricing in a good soft landing, that everything is unicorns and all green stuff. But forward PE ratios for the next earnings season is going to be really, really bad. And demand destruction is there. You can see that on the metals. Dollar is pushing higher, showing you that it's going to be the refuge for big money. And at these levels, investors are not willing to take any risk. If you are an investor, do you think this is the level in which you want to add on the tech? Or would you prefer to just buy down here, even down here? There's a lot of squeeze happening here that honestly is not healthy. And at some point, this bubble, I'm going to call that bubble because artificial intelligence and this kind of AI that is happening right now, and modeling language and auto generative thing, it's a good thing, but it needs to be regulated at first, and on the second point, it needs to be really developed. A lot of tech is taking advantage and selling air for just this to happen, just all the retails buying that this is a change in the future, this is the future. But you have to really open your eyes and see the charts and the price action that is forming. It's okay that you trade intraday all this move. I was long down here and I was short, I think, here, and I was down here, but this was really, I think a lot of people got caught on this. But it's okay to trade the price action. But if you are looking long term, if you're an investor, I think there's no way you like these kind of moves. I always say the same in my videos. Be disciplined, manage your risk, and just don't follow the herd. Make your own opinion, read the markets, read the fundamentals, and if everything is converging, if everything is looking fine, and you understand why something is happening, then it's in group probabilities, that's a good trade. Long or short, you really have to understand what is happening. And if you don't understand why today we tried to move higher and we sold off, you really have to do something else. I was looking for this higher low, but Jerome Powell today brought to the table a lot of things that this doji candle, if we end up today with this doji, I mean, let's review the 2-hour chart, but it's not good. It's not good. It was looking good, but it's not just a couple of candles. We need to see progress, and we are not seeing progress. So I hope you are green today, long or short. And remember that tomorrow, Thursday, and Friday, we still have economic data that is coming out. Thursday, we have core PC for quarter over quarter. That's really important, and GDP. GDP growth rate and price index. And on Friday, we have PCE. This is the most important piece for the Fed, and it needs to be the most important data for you this week. Fridays, as always. Until then, just digest the news, breathe, review. I highly recommend going through the forum and what Jerome Powell said, and to try to understand this price action. And you will really open your eyes. And if you check the other markets, most of them make sense. What doesn't make sense to me is that S&Ps and Nasdaq are still pushing high, and some stocks are pushing all-time highs, while the rest of the market is basically in the middle of nowhere. So this kind of chart, this is the Russell 2000. It's very, very similar to the equal weighted ETF S&P 500. So that makes sense, but this kind of chart makes sense, and the ES does not make sense. It looks good for day traders and maybe for you if you are long bias, but if you're an investor, there's no way you want tech at these levels. And remember, Tech stocks are the most sensitive to higher interest rates. Why are they pulling these kind of insane moves when Fed hike interest rates almost 500 basis points? We are at 5.25%. Why this is happening? Sooner or later, we will get an answer for that. Thank you for your time as always. If you found this video useful, please support the channel, give it a like, and subscribe to the channel to be notified when I upload new videos. I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Discipline, risk management, those are your best friends in order to trade these markets. There's no way you can be successful if you don't have patience to wait for those opportunities, to be disciplined, to put your stop loss and respect your process, and to manage your risk in order to be profitable. That's the key for day trading and to really have a career on these markets. Stay safe, everyone, and see you tomorrow.